did have the guy who founded Or on, and he has like what do you call it? He puts like an emoji over his face.
Oh yeah, like a VTuber type thing. Yeah. I gave that up. I started with that, but it's impossible to do.
It's hard. Okay. Hi, I'm Regan Bozman, co-host of the Token Warrant podcast, and really excited to be joined by Mads from Maven 11 and then Nikita from Barter. Guys, how are you doing?
I'll go first. Doing very good. Good to be here.
Yeah, same. Thank you so much for having us.
Thanks for coming on. Mads, I mean, you were up dealing with U.S. election stuff. I'm curious, what's the vibe in Europe right now after yesterday?
I think the vast majority of people are having a mental breakdown. So if you look at like polling data for like what would Europeans vote for, it's like 70 to 80% would say Kamala. So a lot of people are, especially my parents, are pretty upset. I think as a crypto fanatic and user, I'll probably say I'm pretty happy from like a price perspective. But that's not necessarily the most important part, but from that perspective, certainly.
No, there's things in life more important than crypto. Well, it's really good to have both of you on. Yeah, would love to just start with introductions. Mads, maybe if you want to start like how you got into crypto, maybe where the Rain and Coffee moniker comes from, and then a little bit about what kind of investing you do at Maven 11.
Sure. So I'll start with the name because it's simple. I like rain, I like coffee, and like that's kind of the end of it. And I used it online in a game I played. In terms of getting into crypto, I was sitting very bored in 2013 in a class in high school. Was on my Kindle Fire, these like old tablets without color. At that point, I could go on the internet. I was scrolling Reddit, found the Bitcoin subreddit, took me to the Bitcoin talk forums, and I got completely obsessed in a way, not necessarily a technical way, but like, what the hell is happening here? This is nothing like I've ever seen before. And then I bought my first Bitcoin off Local Bitcoins, and then sort of went through the progress of getting very into the technical side. That became more of a sort of a way, because I moved to China a little bit after that. In China, I ended up really understanding why crypto makes sense from like a permissionless access to it, from like a general asset. And that really taught me a lot about like why this is important. And I think, really that period of my life for why I'm still here. So that was a really big sort of experience in why I'm still into crypto. Ended up joining Maven 11 after living in China for 6 years, beginning of 2022. Originally, I was just supposed to be I do research, I write about the stuff that we do, and I spend most of my time there. I quickly found out that I also enjoyed the venture side of it. I'd always, been interested in and traded coins and so on, but found myself really enjoying sort of working with founders like Nikita and others in the portfolio. And generally what I do is I do a lot more of the technical DD when we are DDing specific projects. And that DD is more maybe not the first call, but maybe a second call or a third call, and more on sort of the technical mechanism design aspect of specifically blockchain, L2s, L1s, middleware, intents, what might have you. And then I try to help as much as I can portfolio companies as well, if there's any specific things that they might not have a completely broad view of. So that could be a Barter needing some knowledge on application specific rollups. Maybe I can help with that. So that's really my role within Maven 11.
Awesome. Good to hear some VCs are still doing technical diligence. I feel like that's been the meme of this cycle that no one is. Nikita, it's awesome to have you here. Yeah, would love to hear like your experience in crypto. Obviously, you've done a lot of cool things like working at 1inch and yeah, maybe how that kind of like led to you working on Barter.
Yeah, I've been in crypto since 2017 full time, but I learned about Bitcoin in 2013, and I was doing my master's degree at the Nottingham University, and we had a fantastic professor from Italy who used to be an engineer, and he was building satellites in the 90s, and then he did an MBA or a master's degree at MIT, and he got into investment banking, and then he was managing a pretty big hedge fund in London, and then became a professor at the Nottingham University. So he introduced us to Bitcoin, and for like 2 seminars, we studied all aspects of the blockchain of Bitcoin, how it's used. And we decided that blockchain is an amazing technology, like really cool with a lot of applications and a lot of potential, but that Bitcoin and cryptocurrencies are really bad. They will never be accepted by institutional investors. It's all tulip mania, and we should stay away from it. So I lived with this kind of like view on the world for 4 years, from 2013 till 2017. And every year there would be like a major hack. MT-GOX would go down. Something would happen with Bitfinex, Ethereum DAO hack. And every time this would happen, I would feel like, okay, people are going to realize that cryptocurrencies are bad and we should not engage with them. But I was investing in equity in the stock market, and I was following some podcasts. And I remember in like January 2017, there was one of the podcasts was Ethereum market cap reached 1 billion. And I was like, how come 6 months ago, they had this DAO event, the blockchain split, and I thought that, they're gone for good. Instead, they were doing like better than ever. And so I started, looking deeper into Ethereum ecosystem, into things that were happening, and then ICO cycle came up, and I got my first job in crypto, and been there ever since. And while I was in crypto from this 2017 to 2020, there was like this period when crypto didn't have a proper market fit, and to me, it was I was a big fan of finance, of economics, and I felt like decentralized finance is the way to go, just because it unlocks so many cool possibilities. It adds like transparency, efficiency, equality. And I, was a big user and managed to connect with 1inch co-founders early on and became the first employee who joined them just before pandemic and before DeFi summer, which was a really amazing experience.
Well, yeah, so maybe that sounds like that professor cost you some money to delay your entry
Possibly.
into the crypto industry. Well, we're here to talk about Barter, and by the time this episode comes out, the fundraise will have been announced. But yeah, maybe just like a little bit deeper into like what you were doing at 1inch and kind of how that experience led you to this whole crazy world of intents and solvers and Barter.
Definitely. Well, since at 1inch, I was in charge of BD and investor relations, integrations, pretty much everything what we did with third parties went through me. And I feel like when you communicate with a lot of different projects, new ecosystems, more people, you get to learn a lot of stuff, and a lot of stuff that is not yet like happening at full scale, but might happen in the future. Like we had a lot of early contacts with different NFT projects, a lot of new L2s that were popping up. They would reach out to like 1inch and similar like big DeFi applications, try to bring them into the ecosystem. And I got to learn about narratives. And after I left 1inch, I was looking what's exciting. I'm a big fan of stable coins. I feel like stable coins and payments is something that we crucially need in crypto to make like mass adoption and just add more use cases to the industry. And I was looking at that, and I always go to majority of the conferences. Like I'm going to DEF CON next week. And so we started chatting with CowSwap, and more and more people were discussing intents, and we felt like we have a good expertise in this area in particular. And intents are great because they give you a lot of flexibility in terms of what you can do with, it doesn't have a deterministic nature as a transaction. So we can, try to improve efficiency, maybe wait for a block, or do some other like fancy tricks. So intents were kind of picking up, and we had a good team, me and my co-founders. We've been brainstorming a lot of ideas. Routing felt like one of our superpowers, and we decided to make a solver. And it took us a while to like fully bootstrap it, but in 4 months after launch, we already surpassed 1 billion volume on CowSwap, and we reached like this 40% market share, which was our peak at that time. And actually our peak ever. And so we felt like this is a way to go. We need to bring back, composability to DeFi, and we need to bring back, just make DeFi cool again.
All right. So I feel like this episode, more than most, kind of requires like setting some definitions and like explaining the backdrop before we get into what intents are and then like the roles that solvers play in an intent-based system. Matt, maybe I'll kick it over to you. Like, can you just give like a super quick overview? Like, what are intents? Why has this like architecture become so popular on Ethereum and other blockchains? And then what role do solvers play like in an intents-based system?
Yeah, sure. It's a good question because it's also how our thesis started before we invested in Barter. So in terms of like what an intent is, a very simple explanation is I want something. I don't specify how I get to that point. I just sort of say I want some output. So that maybe I want 1 ETH. I don't tell Nikita how to get there. I just tell him I want 1 ETH. Get me more, great. But at least I want 1 ETH. And then you send this out to essentially think of it as a mempool in terms of blockchain terms. So a mempool with other intents. And in this mempool, solvers, Barter is one of these solvers. They are specifically very sophisticated actors that are highly optimized at finding roots. So Nikita mentioned roots. In the past, when I would go trade, I would go to a Uniswap front end. I'll send a transaction. That transaction has very specific terms of what is going to happen. That's not the case in an intent protocol. So on a cow swap, which is an intent protocol, I essentially just send an intent for what I would like to happen. And this gets picked up by Barter, by Copium, by a bunch of other solvers. And they try to solve for the most efficient output without me telling them how to get to the output. So these routes could lead to a different AMM than Uniswap. It could be private liquidity if the solvers have that, or if the solvers are connected to somebody with private liquidity. And then you essentially run a Dutch auction. So auctions are pretty important to understand within Incense. We're trying to optimize the output. So the solvers will be participating in an auction, what we call Dutch auction. So it starts from here and goes down and down and down, and somebody bids on that auction. So it's a fill or kill type of auction. And essentially that helps to some extent getting a better price execution for the end user. So this means that when you and I think a lot of larger sort of whales or sharks that use DeFi a lot, they will try to optimize the outputs. So I will go to let's say a DeFi Llama swap aggregator, or I will go to a cow swap aggregator because I want the best execution on this. And that will automatically lead to these sort of solvers and intent protocols winning out, even if I'm not going specifically to a cow swap. Other aggregators might be utilizing that. So that's kind of what intents are. It's a way to get an output without specifying the route to that output. And that output, or the route to the output, is found by sophisticated actors that are able to mathematically calculate all the different routes on Ethereum to get me the state output that I would want. So that's probably the best way to look at it. And it's supposedly, and we can see this pretty easily, it gets way better execution for an end user, which is obviously quite nice.
I appreciate the context. Like, why did Ethereum not always use, like, why was like DeFi 1.0 not built like this? Because I feel like CowSwap came out maybe in 2019, but like it wasn't until a few years later that like you started to hear a lot of people talking about intense-based systems.
Yeah, so generally, I think one important aspect is also the way like the MEF supply chain works now. Lends itself, I think, way better to having intent types protocols. So we always used to have proof of work, and we had miners, and we didn't have sort of a very clean MEF supply chain. We have that now with MEF Boost. We have that with builders, and these builders are often working with these solvers to include transactions in blocks. But the way it worked before was essentially just very simple. This is the exact type of outcome I want to happen. This is how you get through it. So you had very specific deterministic sort of outcomes for this. And why we didn't do it differently, maybe Nikita has a better view on this. You went through the transformation at 1 inch. I think generally, building good tech takes time. I don't think immediately we were thinking, oh, let's outsource this. And I do think from like an actual crypto like philosophical view, there are maybe some like centralizing forces within intents and the way it works that maybe don't talk to the early DeFi builders as much as it might do to others. But maybe you have a different view on this, Nikita.
Well, to be honest, that's an excellent question. And I have no idea why it didn't emerge earlier. Moreover, initially, I don't think a lot of people were like very bullish on cow swap and this, thesis that we'll have like the solvers and they're going to improve, efficiency. And, I would say that, MEF, supply chain definitely helped a lot. Moreover, DeFi kind of fragmented. And initially, I think we had, back in 2020 when DeFi summer happened, DeFi were those, like DeFi Legos. They were extremely composable with each other. And we can do a lot of like interesting things. But now a lot of liquidity is, on L2s across, different protocols that might not be possible to interact with them natively. Or you have to have like API keys to interact with private market maker liquidity on chain. And all of this kind of created this fragmentation and barriers. And solvers emerged like solving this particular, problem. That's all I have on this topic.
I think
Speaking of election tokens, somehow CowSwap has been the biggest winner of this week. Although I think probably maybe more related to the Binance listing than the election.
That's probably it.
Yeah, but I mean, good for them. Like it's a really cool product, and like it solves a real problem for its users, and it's been really cool to see it grow. Maybe like understanding the role of a solver contextually, Nikita, and then I kind of want to like segue that into like the bigger like Barter vision. So today, Barter is like one of the largest solvers on CowSwap. Can you like break down like what is CowSwap? What do people do there? And I think like thinking about maybe solvers kind of as like on-chain market makers is like a decent proxy, but like what exactly are you guys doing in the context of people, trading assets on CowSwap?
Right. So let's begin with solvers and then go to CowSwap and then how everything works out. But solvers as an interesting mix between market maker, aggregator, and MEV searcher or like a bot. So as an aggregator, we primarily route through publicly available liquidity sources like other DEXs and AMMs or RFQs or market maker liquidities that we have access to. As a market maker, we need to understand what kind of risks are we willing to take, and if we want to use our own inventory. And some solvers do that, especially for like cross-chain swaps. And as an MEV bot, we need to analyze the state of Ethereum blockchain on a block per block basis. We want to get the freshest state as soon as possible, and connect with block builders in order to submit our transactions. In the nearest block possible. So solvers. This is like a new niche, which is probably more like for traditional users. Can be connected to market maker for simplicity, but it's slightly different as it's more algorithmic, and it will definitely evolve into some kind of like new entity, ideally a transparent routing protocol, and a lot of teams are working on that. So those are solvers, and CowSwap acts like a DEX. It has a UI, an app, and a user submit intent there. And then solvers participate in an auction. Moreover, solvers are waiting for a number of orders that are batched together, and then they can try to combine them in a different way. Some solvers, for example, might exclude some orders because they might not have access to this liquidity or these tokens. Others might, connect more orders together and that way produce more value. And CowSwap was born on a very cool thesis, which we at our team love on coincidence of ones. So CowSwap is the only platform that allows two orders to be, settled against each other. So if I want to sell one ETH and maybe one of you guys wants to buy one ETH, instead of going through, AMMs and, paying high gas fees, our orders might be connected, and then we save, on fees, on gas, and we also are not exposed to MEV, which is extremely important. And so CowSwap was built on this thesis. However, in order to really unlock it, you have to have access to a lot of order flow. And we spoke with other teams like Uniswap, like OneInch, like 0x, and we asked them, how come are you guys not tapping into the same market or going to the same direction. And they all said that they don't have enough volume to make it work on a constant basis. And that's one of the big ideas and unlocks we initially had about our solving niche, is that we as a solver can connect to various different UIs, front ends, and dApps, and connect orders in between them and improve efficiency and save users more money. And we wrote a big thesis on Twitter about it, and that's how I would say our public career began. CowSwap and other intent systems are platforms that provide a user intent, batch it together, and run an auction between solvers where they verify that the best party is the party that maximizes outcome for the user wins. And
it's interesting in that it almost like something like Uniswap, there's like the front end, there's the protocol, there's like order efficiency, and it kind of does all of those things. And like CowSwap, the model is almost kind of like outsourcing order efficiency to solvers, right? It's really just like who can compete to offer the best price. It's very interesting architecture.
It is. We are still going we're still debating, internally and among different teams on the market whether this is the end game. Probably, we'll have like other iterations. Like, do we really need auctions for swaps and for trading? Nobody knows for sure, but right now this is the most dominant and the best, kind of product on the market. That's why like Uniswap is launched their own similar system, and 1inch with 1inch Fusion, and others like trying to join. Even like Wintermute, big market makers with Bebop, run almost kind of same setup.
By the time this interview comes out, you'll have announced the fundraising round. Tell us about the round. How did it come together? Why did you guys decide now is the time to raise? And then, would love to hear Matt's perspective after that as well.
Sure. Well, we started running a solver, and we feel like DeFi and swaps and trading is like great market. You can easily analyze it. You can benchmark yourself against market leaders. You can see what's missing. And let me do a simple comparison with the market for like decentralized organizations, so DAOs. How big is this niche? Nobody knows for sure how much people are willing to spend and like add and be part of it. Nobody knows. So that's why, we love DAOs, and it's definitely like a great direction for crypto protocols to move towards to. But in terms of like building them, there are lots of questions. And we started our solver system. We instantly became profitable. And, till this day, I think we are the only solver in CowSwap ecosystem that never sold the tokens, because we've had this very strong bet and thesis on, the CowSwap efficiency and, how great of a product that is. And we've been kind of like accumulating, building up inventory, looking at how the market pans out. And we saw a spike of new protocols emerging who are also really dependent on solvers, and not just for like swaps, but for for futures, for derivatives, and potentially some other niches. So we felt like demand for solvers will be growing. And a lot of our competitors have been fundraising, and investors started to look closer into this niche. But I don't think solver in particular was like a popular category. Plus, initially, I think like the valuations and expectations were different between the founders and the VCs, and now it's still even like it's VCs are in charge of the market, I would say, and they are like have a possibility to dictate the terms. I remember in 2021 it was like very different when I was at 1inch. So the different markets. But so we've been looking, and for us it was really important to find great partners, because it's not about fundraising. It's about what you deliver in the long run. It's about what you build and how you can like emerge into this great massive product that you yourself is using, and then people around you want to be a part of. And well, we were incredibly impressed with Maven 11 from their experience with Celestia and some other protocols and how they help them and scale. Plus, I feel like I've worked with quite a lot of venture teams, and maybe some of them are getting less. No, I wouldn't say enthusiastic, but just maybe more cautious. And I feel like newer firms, newer managers are eager to prove themselves and are willing to, go a few steps further to really help you. And Matt's research on sequencing, base rollups really helped a lot. We are in this category. We are also researching, but we learned so much from his papers. So whenever this opportunity emerged, we were like, okay, we really want to be close with Maven 11, and we feel like they are an ideal partner to make it happen. So this is how it began.
That's awesome background. And Matt, it's good to hear the research is paying off. Would love to hear, from your perspective, how did you come across Barter, and on your end, how did the deal kind of come together?
Yeah, sure. And appreciate the love, Nikita, as always. It's been one of the greatest things has been to work with founders on the back of that research. So the way it started is that we've actually been interested in intents for quite a while. So before Barter, we had two portfolio companies that were already doing intents. They were not building a solver, but this is Anoma and Essential. So they're intent-related protocols that need solvers to survive. And generally, whenever I was talking to other researchers and VCs, all of them would say, solvers are not profitable. Solvers are never going to make it. It'll all just be Citadel or the big market makers. And I was like, there's no way this is the way it ends up. What are we building here if that's the way it ends up? So I always think there has to be some other route that is better than this. There has to be a way that there's either decentralized solvers that are not necessarily holding humongous amounts of private liquidity, or solvers that are not necessarily, also trading on the flow they might be trying to solve. So the idea here was that I wanted to sort of talk to somebody who was not really just a market maker. These are way harder to be venture backable. And most people are saying the other solvers are not venture backable. So we had talked to a few solvers, one of them being Otex, who's also on CarSwap. And I was generally looking at a lot of data around this time. So looking at Dune analytics, looking at solver efficiency, gas optimizations, and things like this. And one thing that was always coming up was this Barter was just way more efficient than anybody else, pretty much, especially when you consider sort of the kind of type of team that they had. So the way we came together was, I think Pim from my team got introduction to Nikita. We started talking. And if you want to, I can go more in depth on the entire process, but it was one of the longest DD processes we've ever had, I think. We even had Nikita over in the office. And I very much enjoyed that because I wrote up an entire intent thesis. This is why intents matter. This is why I think Barter and Nikita and the rest of the team are the right people to solve this. So it was very unique in that sense. I got to spend way more time than usual, which is very nice.
Yeah, let's hear the story. I think people find how these deals come together super interesting.
Yeah, sure. So we actually, I think we spent over a month on just doing DD. And then during the course of this DD, we did a ton of different calls. Everybody from the team was on different calls, asking different questions. I was specifically, asking questions about how are you going to just move from becoming just a solver? Because I also knew that while you're sort of a race to the bottom, you're trying to optimize these auctions and get as much value out of them, and the rest of the value is not that much. You might be dependent on incentives from a CarSwap token, similarly on other protocols. So a lot of stuff is needed here, private order flow. Maybe you need a builder. So that was one thing I was interested in. Don't you guys need a builder to be more efficient? Maybe you need to backrun your bundles to get MEV out of this. Maybe you need a settlement layer for cross-domain instance. So there's a bunch of thoughts that I were interested in, and that sort of back and forth was super engaging. And then we also got Nikita. Nikita was in Amsterdam, I think, maybe for a layover to go to another conference. And Nikita came to the office. And one of the things about being a VC is that founder relationships and founders as people and as professionals, it's like super, super important. So getting to meet people in real life is super, super important. And in many cases, that's often not the case. So you don't necessarily get to meet people before you invest in them. And that can be troublesome at times, because I think you really need to meet people to understand them properly. So we met Nikita. Nikita brought gifts for the entire team. We fell in love with Nikita. He bought some great snacks from where he was living at the time. And we had a very long conversation in real life. And that was that pushed us over the edge. So we had spent weeks writing up an extreme thesis on why intents matter. But really meeting him in real life, the thing that pushed us through to say, okay, we want to do this and we want to be a part of this journey that I don't think a lot of other VCs had taken. VCs had backed or bought small portions of like bot builders and market makers, but not a lot of them are taking a chance on a solver that most people are looking down upon and saying, okay, this is not going to make money. We try to make these sort of asymmetric bets, and Barter is really one of those. And it's been pretty cool seeing the progression so far.
I think the last time I hung out with Nikita, he brought me a gift in snack form. So I guess he has a specific modus operandi, but it seems like it works.
It works out.
It does. I feel like, gifts, even back in the early 1inch days, when I went to my first ECC conference after pandemic, I remember I brought like a lot of, space food from, to our partners and friends, investors at that time. I live in Chile right now, so we have amazing, yerba mate tea, which is, very popular in Argentina, but in Chile they have their own blends and it's extremely good, very good for your health. So it's my favorite and I try to bring it to other people so more guys all over the world can enjoy it. But yeah, I initially planned to skip East Amsterdam, I believe. And then, I felt like, okay, Maven 11, are doing this really good due diligence. We enjoy so much this whole process. I should go and see them. And I flew 17 hours. There is a direct flight between Chile, Santiago to Amsterdam with a very quick stopover at Buenos Aires. And so I went there. We had a great talk and it felt right. So everything fell into place after that.
That's awesome to hear. And here we all are. Maven, I'd be curious on your end, kind of digging into the due diligence process a bit more. Like, how does Maven 11 make investments? Is it like, okay, we have this category like intents and we're interested and we're doing research and we're going to try to surface companies here, which it sounds like that was the case here? Or is it maybe more like often, reactive and it's like, hey, we just met this awesome founder and maybe we didn't know that much about this category, but we like this person and we want to back them?
Yeah, it's a very good question but I also think the answer you're going to get is it depends very much at times. So sometimes it's very reactive, right? All the VCs talk to each other. That's an open secret. Like we all talk to each other. So we'll get deals, thrown around. And that's obviously extremely reactive when you're doing this because everybody has seen that deal. Sometimes you'll get a deal across the table that is someone who's reached out to you through DMs because they've read a research paper and like they're building just that. So they'll reach out to you because of that. That happens sometimes. And then sometimes there are deals where like people are too scared to act. Like they're waiting around. They don't know what should you do. And I feel like that was kind of the case with solvers. Like nobody had really sort of made a thesis that made sense. And like, I thought that was kind of an interesting challenge in that sense. So that's something that we do try to do is that we try, sometimes obviously we'll follow the flow at times, but oftentimes, this is the case with Celestia and sort of that building that entire model of thesis that Nikita mentioned earlier, we try to do stuff that is kind of asymmetric. So we spend a lot of time talking about, okay, these are the issues, this is how we might be able to solve them, and this is how this should be executed. And it would in sense, there was a thesis we'd had for years already that like this was a more efficient way of doing things. And I think if you look at the numbers, like intents are silently winning, and that's off the backbone of solvers. So if nobody funds solvers and funds also research into building new solver sort of networks, that might not be the future that's going to play out. So in that sense, that was kind of the way it worked with Barter. Nobody had really built a thesis specifically on solvers. People were just saying, "Oh, we can't do this. It's not venture backable." So that in that sense, there's kind of a fun challenge of like, okay, I need to convince my team like, we should do this deal. And those are usually the most fun because those are the ones that you spend the most time doing due diligence on. But it's very deal dependent. Sometimes, you have a week because everybody and their mother is looking at the deal, and you have to be extremely quick, and that's not fun because you don't get to deep down in with the founder nor the project itself.
I mean, Nikita, I'm curious for you in your conversations with VCs, like, Mod's mentioning that maybe like solvers it wasn't a category that like venture capitalists loved. Like, did you have other conversations where you're like, hey, look, like we're trading billions of dollars in volume, like we have a real business, and maybe VCs either didn't understand the business model or just like weren't as interested in it?
Yeah, well, we received a lot of similar feedback from VCs. And like a lot of people, like we initially connected with majority of venture teams just for the research purposes, and they would like look into solvers. They would love to crack the numbers and analyze how we see it all evolving and moving forward. And we've never really had an offer, but the solver position plus our previous experience and allowed us to kind of like stay afloat and have this comfortable position where we don't necessarily need to fundraise like right now. So we had an opportunity to wait for the right partner. But overall, I think DeFi in general is just not a very hot topic right now inside crypto. And Ethereum as well is kind of, I would say, losing slightly its dominance to Solana and some other chains. And then the fragmentation between L2s is a big question, and it's not yet solved. And we kind of like have to wait and trust the foundation and the researchers, how they like kind of united. So yeah, overall, a lot of trends were kind of like negative at that time. I think now it's changing, and with more and more intense systems that are built and more use cases for solvers for like cross chains, for liquidations, for other things, it's going. It looks much brighter. And, speaking of, conversations and relationship and investors, I think me and you, Regan, have a great stories that we should say that we were connected initially at my time at 1inch, and you were at Coin Fund, and we were introduced through Libertus Capital, and we managed to stay in touch. I was always a huge fan of the Dove metrics that you've produced. It was like an amazing, database of all the deals and all the trends, and it really like helped me a lot to like analyze the market and different niches where like certain specific VCs want to participate or ecosystems. And we are so proud to have you on board. We are really picky with our investors, and it's an honor that you also trusted us and participated in our fundraise.
We're excited to be involved. I don't usually get complimented on the show. It's usually the VC who's the guest, so it's nice to hear it sometimes too. So I think we're sort of nearing the end of the episode, but maybe like just looking forward, like Barter, like you have the solver now. You guys are exploring designs and kind of like around expanding, matching transactions and all of that. Like what do the next 1-2 years look like for Barter? What's on the roadmap?
Sure. Well, we feel like that we need to bring back transparency and composability into DeFi, because the big problem with solvers, imagine that let's look at the like actual real cases. So for example, MakerDAO was recently migrating, and updating their protocol, changing the name, changing the token, updating their smart contracts. And they had to manually go and ask all the different, solver systems to integrate the new versions of their contracts and connect them on like day one. Otherwise, they would miss out on order flow, liquidity. It might cause, price volatility and like user losses. And, not every solver kind of managed to upgrade it and do it in time. And only like at first day, there were only like 3 out of 20 solvers who were supporting their launch on CowSwap. What I'm trying to say is that it's kind of super inefficient that all the solvers have to do the same job, and all the new AMMs, all the new DeFi protocols, they have to, find their way into this routing and trading and just, ecosystem of intents. And this feels really wrong. This feels flawed. And we need to find a way how to make it more efficient, more transparent. Moreover, we need to find a better way how to, submit and settle transactions on chain. And there are different approaches to that, whether there should be like updates on a block building site, whether we should have app-specific sequencing and stuff like that. We feel like everyone is researching, a lot of teams are researching it, but we haven't yet seen an idea that would, made us very happy and we would feel that it's the way to go. In terms of like even app-specific sequencing, it doesn't really change the at composability because different apps have the different users, different order flow, and a lot of liquidity. For example, Uniswap version 2 pools are still extremely popular. There are a lot of like activity going on there, and they're not going to be part of any kind of app-specific sequencing mechanism. Plus, we really hate the name and how you shorten it to S. Which is, if we want to be a serious industry and if we want to like trade billions of dollars every day of various assets, of real world assets, it has to have a better name.
We need some better marketers, yeah.
Definitely. And we've been doing a lot of research. We hope to announce a few things relatively soon. We feel like the routing should be decentralized and it should be verifiable. Plus, so this is the direction of our research right now. We also want to be one step more radical, I would say, than others. So, for example, Uniswap recently announced Unichain, and it's definitely a great step forward, and we love some of the ideas they have. However, they're building on top of optimism stack, and there's a differentiation between another L2 and the Unichain, a chain for like trading and efficiency and liquidity is not there. So like the difference between like Base and Unichain would not be as dramatic as it should be, and we hope to bring something that no one else has done before. We'll see how it pans out. We really want to publish it already. We're still doing like the latest tweaks and get public feedback, users and community opinion on our progress so far.
Nice. Well, I'm excited to see it out. Really appreciate both you guys joining. Maybe just like to wrap it up, if someone wants to follow you on Twitter, see some of that excellent research coming from Mads, what's the best place to follow or get in touch with each of you?
Best way to follow me is on CRX Rain and Coffee on Twitter. I have a Substack called rainandcoffee.substack.com. That one has like old stuff before I joined Maven 11 as well. That's not the greatest, but some of it is kind of cool as well. Others, we have a Maven 11 Substack as well that you can go read all the research on that I've done while at Maven 11. That probably covers all of it.
Follow us on Twitter. We are Barter DeFi at Barter DeFi, and it has all the latest materials. That's the best way to keep in touch with us.
Awesome. Mads, Nikita, this was a lot of fun. Really appreciate both you guys coming on.
Thanks for having us. Always fun to talk both Nikita, but also with you guys at Lattice.
This was great.